ladies and gentlemen, we are going to now explore a little bit in more detail the issues that were presented beforehand. And maybe I would like to start with you. Put on my glasses, otherwise I don't see what I say. Michael, we've heard VIG about what they're doing in order to deal with sustainability, risk awareness. Austria is an interesting market in insurance because you have very large groups and then you have the rest. Now, my question to you is this sensitivity of these sustainability issues, are they shared by the other players in the Austrian market? And maybe are there any initiatives that you as an insurance association are carrying out to deal with this? Michael.
Karel, I could make it very short and say twice yes, but I think...
It's too short.
It's too short, okay. So maybe just to explain a little bit for the audience here, looking at the Austrian landscape of insurance companies, I would say large groups, I don't know if you would 100% subscribe this on a European level. I guess that our largest groups are still on a medium size, which maybe is also important looking at this, let's say, topic of, I put it already, proportionality. And then we have, let's say, of course, also international, daughters of international groups. And what is important, also a quite high market share of regional insurers. So in the different provinces, regions of Austria, regional insurers. And we still have also very tiny insurers, let's say, coming out from a tradition of some 100 years in some villages, insuring, let's say, cows or in farms or whatever. So I think this, I just that you know what the Austrian market is looking like. But now coming to your question, I think one thing we also have to differentiate when you ask this question is what are we talking about? First of all, are we talking about products? I think small and all companies basically have the same products. They deal with the same clients. I think there we have to see there is one part, Karel, allow me, your questions at the beginning, I think it's very difficult to answer yes and no. I think they're the shades of green. It's not so clear yet. It's a process we are in. And also in this sense, I think with products, looking at what we see so far in Austria is the demand is not as high as it could be. So I think there is still room for improvement, but we should take this in mind. So looking at the products. Second part is looking at the risks. And looking at the risks, we also have to differentiate. There is a different exposure for life insurance companies, for non-life insurers, also for companies who have a certain exposure in nat cat risks. I've heard yesterday that, I don't know if this is a common knowledge, but some reinsurers consider Austrian as the Caribbean of the European Union. Why? Because we have so many different nat cat risks in Austria. The avalanches in the mountains, the flood risks, hail, etc., etc. So there is a different picture also within the category of large and small companies. But coming to the point, basically, I think it's evident that all companies, if small or large, have basically the same regulation and which bears the same amount of cost to implement this regulation. And of course, this opens the question for proportionality. And I think this is really a really important topic within the VVO, I think also within European markets in general. However, I would also introduce another thought in this debate. It's if you look at larger companies or medium-sized companies, you also have to see, okay, you can say you have economies of scale, so it's easier to deal with legislation. Point taken. On the other hand, of course, for a group, I think you know it from your own experience, to make all the coordination, it's also a cost. So I think you have to counterbalance this. And this brings us, or brings me to the conclusion, basically, what we should do is, when we design regulation, we should already have in mind the small companies and design the regulation. Mrs. HIELKEMA, you have said smart. And I think that's the point, smart, clear, and easy to implement also for small companies, but for everyone. And so we don't have to search and pinpoint who has to do less, where is the threshold, who is small, who is not small. So I think this would a general message. Karel, allow me, when talking about what are the issues for insurers, it's well understood. We see in regulation there is a certain degree of complexity. There is the question of clarity. We have a lot of discussions within the associations of how to interpret certain provisions. So everyone has the best intention, but really to not make anything wrong, question of greenwashing, whatever the risks there. So all our companies have good intentions, but it's very often a question of clarity. It's the question of quantity, of course, of regulation, and also of consistency, contradictions, etc. And maybe for the companies as such, there's also an organizational point. Of course, you have to think you build up know-how on your own, and particularly for smaller companies, you build up resources on your own, or you buy the resources from consultancies. I think that's maybe consultancies would like, but it's an enormous cost factor. And this brings us all to the question of let's say, this topic of proportionality. Having said, maybe, also timing is an important topic. When talking about timing, we see, for example, Karel, Solvency II, that was introduced in the review, a new provision for SNCUs, the small and non-complex undertakings, to fulfill certain proportionality criteria. However, what we see now with the postponed implementation is that maybe companies have to first implement the CSRD provisions, and only at the later stage could benefit from this, let's say, proportionality aspects for small and non-complex countries. So there are some issues still on the table, which maybe should be found a solution to it. Having said this, regulation in general, the European Commission has outlined that the intention to save 25% of regulatory burden for companies. We very much support this. I think we should all go in this direction, also in the field of sustainability. I think there is a lot of work to do. Our umbrella organization, Insurance Europe, was giving very concrete technical examples how to do so, and I think this is also a very important point. Having said this, I maybe just about the proportionality topic, I also want to point out it's important to do this whole process, and again it's a process, it's a step-by-step process as we see it, to do it right, because there's also this connection with competitiveness. I think in the theory also, if you do ESG right, then you have a competitive advantage in doing so, being the first mover. But if we have a too complex, burdensome regulation, this could a little bit weaken this effect. Having said this, maybe to the second part of your question, which is what the VVO is doing. There, I'm not sure if everyone is aware so much what an association is doing, but there are certain limits for associations because, well understood, the association has its constraints when it comes to competition. And in principle, it's up to every single member company to decide how much they enter into this field of ESG, what they want to do. They have their questions of how much investing in the implementation process, and these are things they do not essentially share with other companies, and of course also in the closer sense of competition issues, that's a restraint for associations. However, what I can say, it's a top priority for the VVO, ESG. We have established a working group for sustainability reporting. There is someone among us, is my colleague Marietta, who is leading this working group, and where insurers are basically discussing how to interpret certain provisions. We do monitoring there, so there's a lot of activity in the, let's say, implementation of the standards. And we have a project to develop something like a sustainability report by the end of the year, where we also try, which is not an easy task, to compare all the different data, but we try to show a certain picture for Austria, which I guess in the next years might be then still developed. And having said this, maybe I also would like to point out again that the insurance industry business as such is very, you pointed out ESG, and the social part, it's per se a long-term business and it's social. So also if you look at the history of Austrian companies, the companies were very much founded with the background of, let's say, to give social benefits to the broader population. And also when we look at the VVO, what we are doing, we are very much involved in the field of NatCat prevention, in the field of road safety. So we have, et cetera, et cetera. So there are a lot of topics we as association can do. And last but not least, of course, we support Insurance Europe in its feedback, giving to European legislator to be able to really find this smart regulation, to give feedback in this direction. Mrs. HIELKEMA, you've mentioned during your speech.
Okay, thank you very much, Michael, for pointing out the particularities of the Austrian market. I will remember that you consider yourselves the Caribbean. Myself being on the board of the Bermuda Monetary Authority, I can tell you it looks slightly different there than it looks in Austria. But I think the point that you made on proportionality is a very important one. And maybe later I will ask maybe Petra to say also something about that. But let's turn now to Romania. Romania is a very big country.
But not the Caribbean.
No, but sometimes it gets as hot and as sticky as in the Caribbean in Romania. But how do people perceive ESG in Romania? Is it the same way? Is it less intensive? Is it still a faraway show? Or let us know a little bit about what you experience on the ground.
Well, difficult to talk after such esteemed speakers, but let me put it this way. We do at UNSAR, at the National Association of Insurance Companies, we do regular polls, sociological studies. We do them every year, 3 or 4 of them. And in one of them, we have actually reached out to people and asked them, okay, these are regular consumers, okay? We've reached out to them and we asked them, do you believe that climate change is real? So, yeah, and we have been doing this for 5 years now, and the answers are really positive. I mean, almost 9 out of 10, 89%. Yeah, they think that climate change is real. This is a good sign. Then we've also reached out to them and we said, okay, what is the biggest threat from your perspective? And they are concerned, and they're increasingly concerned about heat waves, about floods, about fires. Yeah, so the society feels it. The question is how you can translate the perception from the study, from the paper, from the PowerPoint, down to bridging the protection gap, down to increasing insurance penetration. But I will not go into that because we have here the CEO of PAID Romania, Mrs. Nicoleta Radu. I'm sure that she will discuss more about mitigating natural catastrophes later on during the conference. But I will go back to what the industry is doing. I mean, it was 10 years ago when we discussed about the Non-Financial Reporting Directive, 2014. Now we are discussing about CSRD, CSDDD, pay transparency gap. I mean, there are so many, and Michael was touching upon that, there are so many new, upcoming, or already existing regulations that the industry needs to apply. So we are on a learning curve here. This is a market consisting of 25 companies that are learning day by day how to implement these regulations and how to do their reporting even more meaningful. And this is a process, it's a learning curve. We are happy to, and happy is the word. We are happy to have the support of the international groups. Most of the companies operating in Romania, they are part of large international groups, so we are happy to be able to learn from their expertise, and this is an advantage. Another advantage would be that, being a smaller market, the penetration is 1.3.5% of the GDP. We are easier to steer. Yeah, this is a sailing ship, a sailing boat, a small sailing boat, which can be easily steered and maneuvered as opposed to a large aircraft carrier. So we can implement certain things, but we are still building specialists, people are learning, we are doing lots and lots of stuff. But the good thing is that clients, insurance clients, they started to ask questions. I was discussing with my members here, corporate clients especially, they started to ask questions when they take up insurance. When they reach out to their insurers or to their broker, they started to ask, how do you do this? Do you have this policy in place? Do you have a sustainability report? What is your sustainability rating, if I may say so? It's a trend. And I think that the new generations of individuals this time around will also follow up on that. I don't think this is my case for, it's the case for my generation. I'm not sure that people in my generation look at how sustainable their bank or their insurance company is at this moment. But I think that younger generations will go more and more into that. Well, to sum it up, I think this is why we are building actually in UNSAR a sustainability section, like a department. We are attracting specialists, working group, starting to work on this. This is why we are looking forward to the greenwashing report, which is about to be published, I think, this May, to see where we stand. Because now there are so many things happening, so many regulations. Not all of them are accessible in a single access point. So we need these resources probably put together. We are still building, as I've mentioned, the specialist base to be able to cope with this regulation. So it's still early phases. But I remember how consumer protection was 15 years ago as a trend. I remember how digitalization was 10 years ago as a trend. People started to do conferences. People started to put out white papers. Things were moving. But this is so much more than a trend because it doesn't affect only the insurance industry. It affects all our lives. And I don't think that this will pass. Yeah, I don't think that in 5 years ago we will say this has been a trend and now we can forget about ESG and discuss about something else. I don't know what. This is here to stay and we need to learn. This is the message, and actually this is why I think we are here. We have several members of UNSAR in the room. We are happy with that. Trying to learn what's coming and how we can adapt.
Thank you. It's interesting to hear from you because I also see that you're an optimist, because you should be an optimist. In a country like Romania, sustainability can open enormous opportunities for the insurance industry to offer new products and to sensitize people to insure themselves, while they may not have been doing that in the past. So you are definitely, I would see you on the side of the countries that stand to benefit from all this.
We are optimistic from this perspective, for sure, and I am optimist, but Petra said that we should be optimistic, so yeah. We are following the regulators. But
we will quote you on that.
Thank you, please do. But we also need to be proportional in our approach, so please do quote me on that one too. But also I think we have a lot of things to learn. I mean, and just to wrap it up, the future, we believe that the future of insurances lies in embedded insurance, yeah, affinity products maybe. Maybe in the future those new generations of clients will not get in touch directly with their insurance undertaking, with their insurance carrier, but they will buy the next phone or the next, I don't know, smartwatch, TV set or whatever, and they will buy insurance together with it. Well, the company that will sell you, or the website that will sell you that particular TV set or whatever that is, probably will use an ecosystem. They will work with an insurance company and they will team up only with insurance companies that have a certain ESG approach. And the same way goes for insurance companies. They will work with I don't know, retailers that have a certain way of approaching sustainability. So I think we are tied together from this perspective, yeah, if we look at embedded insurance.
Okay. Petra, coming back to you, we will all, on the 9th of June or the 8th of June, I don't know, it's a couple of days, we'll go to the European elections. We've heard it before, you've mentioned it, we might see some changes. Because people's attitude towards these important issues have changed. We've seen the farmers on the road. We've seen industry protesting against heavy regulatory agendas of the EU. US EIOPA how do you see this evolving? Michael mentioned also this idea which the Commission has of reducing reporting by 25%. I'm an old man, and I can tell you this, I've seen this before. It is impossible, trust me. But still, how can you make the impossible possible? And maybe say a word also about proportionality. Because there's a large part of the market that if they saw this slide with the transition plans, they should be very worried. So what can you say then to give them some hope? Petra.
Yeah, thank you. And this, of course, is a very important part of also our future. And I can't predict the outcome of the elections. But what I can say is that you feel a certain... people are getting tired. I mean, they have to think about how they travel and if they can travel and how they spend and there's so much. And also companies need to do that. And I think there are many who just want to, just put the blanket over your head and pretend it's not there. And then we will stick it out at least for the next 10 days and 10 years, maybe. Meanwhile, we do complain it's too hot and there's water in my living room. But at the same time, to act on that and not seeing the direct impact of your activity is difficult. So there is this move in society to just ignore the problem. The point is, if you are in a position where you can actually lead part of this process, be it leading your company or leading the decisions in your community or being a supervisor, you can't ignore what is coming. I sometimes attend events where they really talk about the real climate risk and what is coming, and that is where I do get depressed, frankly. I mean, the change is real, and so we need to somehow act on that. And I hope that those who are in leadership positions will continue to do that. Now, that doesn't mean that you need a tsunami of legislation. I agree with that. It also does not mean that you need to do one thing and then the next, and then we change the previous thing and then we go back, because that's confusing. So what we've seen in the last couple of years is that the ambition to deal with the problem and the urgency that I think is felt for the right reasons of the problem has led to the introduction of a lot of legislation in a very short time frame. Also EIOPA, we did not, and we created an around there where we more or less had no time to consult often. Now, this has led to an outcome that is sometimes hard to implement. There's also an outcome that, and I think it's partly due to the fact that people were busy implementing IFRS 17, that only in the last half year before the start of CFDR, we got a lot of questions that were very relevant questions. And it would have been so good if we had those comments in the consultation, because we could have fixed it. But now we're not. So now we need a change of SFDR, and that raises question on in what speed then do you move with level 2 and level 3. So what I say is don't give up on the activity because the urgency is real, but do consider pragmatism, do consider proportionality, and see how you make it practical. Now here words are very important because there is also you also react to each other. So for those who see the urgency and really feel that something needs to happen, and there are many in Parliament and they introduce the legislation, if they talk to an industry that only comes back saying, yeah, we know it's urgent and we really feel it's urgent, but... And then there comes this whole list of what first needs to happen before we can move. What that does is it gives the impression that there's no movement. And no movement means we need more legislation. That's an automatism in Brussels sometimes. So I think also we need to be careful on how you message the problem and how you are actually also moving at the same time. Because I think we first had transparency, then we had ORSA, now we have in the last phases of the negotiations also the transition plan included. And it's all because there is this sense that there is too little movement in the industry, so we need to do more to make them move. So I think there we also need to balance as an industry and show there is movement. And I think we need to balance as a parliament and as an other institution in the EU, understand that to see the movement, you do need to give it some time. So maybe you don't see it this year, but you will see it next year. And that doesn't mean nothing is happening, but you need time to implement. On the implementation, proportionality is key, as is, I think, materiality. And I think materiality actually is currently well done in the CSDR. And on SFDR, I think there, if you are a first mover and if you move fast, then clearly after a couple of years in a new topic, you do see where you need to improve. So I would very much welcome a review of the SFDR. I would welcome labels, we would call them categories, that would clarify a bit what Article 8 is, thereby giving clarity. I also strongly believe in guidance like the ORSA guidance we gave, where on the one hand, you keep the room of principle base for those who are moving, but at the same time, you provide very concrete rules, steps for those who actually prefer to just have a concrete rule to follow. Because sometimes that is also proportionate, that you just literally say, if you do this, you're okay. Finally, in all that, my focus at EIOPA is and will be the risk. We need to focus on the risk because the risk is real for our companies. And Europe is on a path to decarbonization. And I think, Alexandru, you said it well. Even if you want to do business as an insurer with other companies or other platforms, you will be asked about your ESG strategy. So it is not only about avoiding the risks of greenwashing. It's not only about dealing with the risks that will impact your balance sheet, but it is also about being attractive and staying attractive to other business partners to work with you. It's staying attractive to people who want to work with you. And that is all an ESG agenda that you need to include. Now here, and this really is the positive, there's a big part of ESG that as an insurer, you don't have to create and make up to be attractive, because it's what you do. You really help people and businesses to sleep at night. You really make sure that they don't have to worry and they can move because you take care of the risks. You really make sure that if people are really sick, they can focus on getting better instead of how to pay for it. And there are other societies where that is not the case. You really help people who were struck by the floods in Slovenia and Scandinavia, or the hail in Italy, not just by a lump sum on their bank account, but they actually can talk to a person that listens about what happened and then gets them a hotel and tries to get the belongings back and then transports the whole family back home. And those insurers that did that last summer, they actually came back from their holidays to do that. So I think there's a lot of benefit that you bring to society that is in the S. So there's a positive part, there's a risk part, there is a sustainability part, and there is work that needs to be done. Now let's be very pragmatic on the work. Let's sequence it in an order that makes sense. But with that, I mean, let's not implement something this year if we know it's going to change 2 years later. Finally, on the 25%, and Karel, I think it's very realistic what you say. Now, did we already receive a letter from Brussels to strike out 25% out of Solvency II or SFDR? No, we didn't. And frankly, that is also for them to do. But what we will do when we do the implementation of the reviewed Solvency II is that we will review during the review, not only see what we need to change or add, but we have a serious part of the project what we could take out. It's not going to be easy, but we do. We also, in the Solvency II reporting, reduced the number of data points that needs to be reported by the insurers who don't have an internal model from 6,000 to 5,000. And that was before the statement came. And I say that because I am conscious of where we don't need it, where we can do less. Let's do it, and I think the Solvency II review is a good moment. But even if we achieve that, and I go back to the 6,000 that drop to 5,000, it sounds nice. But at the same time, we also introduced the additional requirements for cyber and for SFDR. So per saldo, there's still an increase. And I think that is the reality. at the moment. If we want the data on climate, if we want the data on cyber, we need them. There is an additional effort required in the near future. That's the reality. So I'm not open to saying let's not do it. We can't. I am open to more pragmatism on the how and how make it proportionate and doable.
Thank you, Petra. I mean, a lot of what you said, we could spend days discussing that because it's all so valuable and so true what you say. In fact, you know, as a former regulator, my message that I would have to EIOPA is sometimes you have to say no. And that's, I think it's the most difficult thing in life, is this possibility to say no. And sometimes if you tell the Commission no, and you tell the Parliament no, and you justify why you're saying that, you'll see that you have a lot of support. But people get carried away in a train that's running at 200 kilometers an hour. It's difficult to stop that. So, but let's.
Can I quickly say?
Yes.
But you need to do that jointly with an industry. I think where we were strong was on the AI Act, where Brussels wanted to have anything done in an insurer included as a high risk in the AI Act. And here we said no. And actually, I wanted everything out. Now we have life and health still in. The transition plans, we brought that back to prudential transition plans, because we never asked for transition plans, but they appeared. Yeah. Now we have prudential. Now we made it back to prudential. Once it's focused on the risk, we will indeed look how much we already have in an ORSA. We are currently developing our ideas. I'm telling industry, if you have concrete ideas, we need them by the end of summer, because then we start writing. But we need to be. But they are in. So yes, we can say no, and we do say that, and definitely if an industry says no with the supervisor, like with the AI, you have results. But there is also this very powerful drive to do more on climate.
I know.
And it's very strong.
Good. Well, maybe invest a little bit in brakes or something like that, so that we don't run with the train against some kind of a mountain in the Caribbean of Austria. If I may now ask Lian, you know, VIG is a group that's present in so many different countries. We have these challenges. How the hell do you manage that? Are all your members equally committed to the lessons from Vienna?
Good question. We are really indeed a very big group. We are the largest insurance group in Central and Eastern Europe, and we operate from the north, from the Baltics, to the south, like Albania, from the east, from Georgia, where we are the only international insurance group, and we also have operations in Germany, for example. So a very, very wide range of countries, small countries, big countries, also when it comes to the size of the companies. The luck we have is we are 95% of our gross written premium is in EU, so we have one regulation, and that's really a great thing that distinguishes us from other peers. What also distinguishes us quite a lot is our management style, because we are a very decentralized organization and we have very much count on local management. And also when it comes to products, they are very free in the companies and the countries in which products they develop, which best fit to the needs of their clients. And this is also very important when it comes to ESG, because the ESG perception is quite different in all those countries. Each country or region has its own topics. So it's very important that you address individually with products and so on the clients. And that is what we can do with our management style. When it comes to the implementation of all this regulatory stuff, also IFRS 17, now we succeeded to implement. We have a strong focus on cooperation and collaboration and communication. We call it CO3. It's our own department we have that cares about that, because we have a huge swarm intelligence in our group, and it's very important that we use all the intellectual and human power that we have in our group. So it's not the holding that does everything, knows everything, and has the big budgets. It's all of us. And also ESG, of course, for me, a very strategic topic. And when we come to risk assessment, the risk side of ESG, we have to do it together because the risk is the same for all of us, and we have to find a common approach and have to do it together. And when it comes to regulation, it's really very important that we have the same interpretation in all the countries. That's not always the case. There are always some also individual influences, so this makes it very complicated for us. And also that we can do consolidated reports, so that helps a lot also to make it efficient, and would really ask all regulators to not undermine these consolidated reports. So we work strongly together, and with this local management and individual possibility to address these topics, I think we are doing quite well. And the climate change is real, and we see it in our numbers. I gave you some numbers in my presentation, and I think also the risk awareness is increasing. It has increased after COVID, after Ukraine war. People get more aware of I can lose something, I belong, so maybe why not insuring it? So this helps a lot. And we really focus on this risk literacy. It's the financial literacy is more for us a banking term. It's risk literacy. It's increasing the risk awareness, and people are really willing to insure against risks, and this is very important. And we can not predict the future, but what we really can do is work on it. And so I really want also to see the positive side, the opportunities out of this ESG, or what I explained in the transition plans, not to complain always about regulation and the bad things, but what is the opportunity we can get out of it? What can we contribute to make this world a better one?
Very interesting. And what you said about this decentralized approach is very important, because one of the challenges I see in Europe is that in many countries of Central and Eastern Europe and of the Balkan, there is a risk that because big groups are operating there, that the local entities are going to disappear, and that the consumers there will only get the products designed in the headquarters of the big groups. And that is exactly what we don't need. That's exactly against sustainability, against ESG. So I'm very pleased to hear from VIG that you have learned that, because in the end, this is in your advantage. Because if you let the local people come up with the good ideas, there's more chance that you can develop your market. So, ladies and gentlemen, very interesting ideas and thoughts. But I'm sure here in the audience is some people that say, you didn't mention this, or what do you mean by that, or I oppose this, or I oppose that. Anybody has a question to the members of the panel? Don't be afraid. There are no bad questions, only bad answers. I see there. Yes, please.
Thank you, Karel.
Austria.
Let me be the icebreaker. As Michael BRANDSTETTER from the Austrian Insurance Association already communicated, we have this working group for sustainability reporting, and there are some topics, I think, which is really sensitive to the industry concerning data which the companies will have to provide in future. And there are some reporting requirements. I have the feedback from our members. It's really sensitive, for example, these greenhouse gas emissions. Liane Hirner already mentioned today own operations, but we have to report in future scope 1, 2, and 3. And we have the feeling that the insurance core business model has to be reflected for the communication, what will be the reflection of the data and the reports the insurance company will have to do in future, that there's the right understanding for the insurance business model. And I only want to pick up one topic concerning motor liability insurance. Nomen et omen, it's a liability insurance, and we have many companies. Motor is most of the most important lines of business, and then you might have not a good Scope 3 index. And we fear sometimes that based on this insurance model, and to address all these reports to the public, to the stakeholders, and we have various stakeholders when you're a listed companies, but also NGOs and other stakeholders will have a deep look into this sustainability reporting, that our industry is also reflected in the right way, because we all are committed to the transition, and I think this was also one topic which was reflected by Petra HIELKEMA, but also by Liane Hirner. That transition has also been taken into account, also in your communication when you are underwriting once more your contracts with the industry, but also with individuals. And I think transition and to have the right understanding what can the industry take to the future is right, but the understanding for the business model is very important.
I think that's a question for Petra. Petra, what do you think about that? Because that's interesting, motor insurance, it's polluting, yes?
Yeah, so interestingly enough, we do look at the reporting, we don't look at motor insurance, that's with the Bureau. But let me say the following. I think what we're touching on is that a lot of the sustainability regulation is cross-sectoral. And the reporting is cross-sectoral. And then there may be moments where as an insurance industry you say you won't fit in as well as you would like to. I think the same will pop up with categories for an Article 8. If you do a transition category or a sustainable category, we need to look at that. Then the next question is, why does the insurance industry not come out good? One, it could be because actually the activity is not very sustainable. Now, that is just then the reality, and the question is, does that mean that we can transition out of it? But as I said in my opening, I'm not shocked if something is not sustainable today. That's why we still need the transition. If we were all already sustainable, then why have a transition? So if the start is not good, but there's an opportunity, and I think here transition plans can be positive, because then you can say, we know this as a company, we realize this, and we actually have a plan to make this better. That's one. A second could be that you simply don't fit because the cross-sectoral character of what is proposed is not fitting to a balance sheet of an insurer. That to me is more concerning, and that is what we as EIOPA also really focus on, because maybe then we need other solutions to have a better and more fairer reflection of the insurance industry. So I think we need to look behind then what the number is. Is it something that still needs to transition? How can we do that? How can we communicate that? Or is it something where legislation doesn't fit to a particular, cross-sectoral legislation doesn't fit to a particular model? I think that is how, from a pragmatic perspective, I would approach what you are suggesting.
Thank you very much. Ladies and gentlemen, time is running out, so I would like you to join me in thanking my panel members for an excellent discussion. Thank you so much.